I'd be surprised if the major banks didn't pass on the first full rate cut when it does happen. And if they don't, it could be time to find a new lender. But before we get to that, let's take a look at what you can do to get your home loan rates down. As the rates start to come down, your default minimum mortgage repayment will also reduce. But if you can keep the repayments at the same amount, i.e. you keep paying as if the interest rate's higher, but actually the minimum repayment goes down, you'll be chipping away at the principal much faster of your loan, which means you pay less interest over time and you're gonna pay off that home loan way quicker. Most banks will automatically keep your repayments the same unless you ask them to lower it. So unless you really need the cash, sticking to the old amount can be a really smart move. It's huge. On the other hand, if you're feeling the pinch and you prefer a bit more flexibility, you can consider putting those extra savings into an offset account or the redraw. These accounts let you keep access to those additional savings, that $400, without committing the funds. I mean, you can still get them back if you need. An offset account is just a regular account linked to your mortgage where any balances offset what you owe. A redraw account lets you make extra payments on the mortgage and still access those funds if you need them. They're both awesome tools to help you save on interest costs while keeping your savings within reach. Take a few minutes to look at the rates across the different lenders and banks. You can just quickly jump on Google and find this out. If you're getting a better deal or other lenders are passing on the rate cuts more fully, consider refinancing. It's easier than ever to switch and you could lock in savings that could last a lifetime. You can also try to negotiate directly with your bank. Think of it as being on the same team. You want the best rate and the bank wants to keep you as a customer. Don't be afraid to ask, because even a small drop, 0.05%, 0.1 in your rate can make a huge difference over the life of the loan. Here's a simple plan. Do a bit of research on what other banks are offering, then call your bank for a rate adjustment. I even like looking at ING. They usually have all their rates on their website, pretty transparent, and a lot of banks are happy to compete with them because they're a bigger bank. Some banks, if you're banking with say Westpac or CBA and you say I'm going to Billy Bob's Credit Union, they're going to say, well, they're not a competitor, but they do consider ING or say Macquarie Bank an equal competitor and will try and match their rates. Once you got this info, call your bank and ask for a rate adjustment. Sometimes you'll need to speak to the retention team or even just their home loan specialist to say, well, I want to get a better deal. Be polite and direct. Let them know that you're exploring other options. Banks often have a dedicated team. And like I said, they'll try and get you to compare apples with apples. I definitely wouldn't hesitate to make a call. If refinancing feels out of reach because of changes in your income or credit concerns, reach out to your lender early. If you are feeling that pinch, a lot of banks do have hardship options like temporary repayment reductions. They look at moving to interest only if things are getting overwhelming. It's worth giving them a call to try and get some help. You can also check out some free financial counseling services that are offered. The government actually offers this. They give tailored advice and can help you out if you're not sure where to go. And remember, there's more banks than just the big four. There's lots of small lenders and credit unions that sometimes pass on the rates more fully.